Welcome to the Anchored Voice. This is a podcast helping men to anchor life. I'm your host, Dr. Phil 2. Welcome to the program. Hey, what's up, everybody? This is Dr. Phil 2, and this is The Anchored Voice, a podcast helping men to anchor life. We want to thank you for joining in. Got a very special guest today, but before we go into that, I just want to thank you for joining us and also request that you subscribe to our YouTube channel, McGuire ENTV, McGuire ENTV. We'd love for you to subscribe to our YouTube channel right now as we are going forward. Also, our podcast today is sponsored by McGuire Wear, Fashion Your Faith. We want you to go to McGuireENT.com/McGuire Wear, and you can get your Christian apparel, okay? We got apparel like I will not fear. God is crazy about you. Prayed up. All right. And our new one coming out is Everyone Needs a New Start. So check us out on McGuireENT.com/McGuire Wear. All right, everybody. Listen, this subject today is all about investments. And I'm going to bring on my man, my boy, Danny Patton. What's up, my brother?
Hey, how you doing? How's everybody doing
right.
out there?
Good, man. Glad you are on, man. Glad you're here.
Of course.
Yeah, this is the first podcast of this new season. So this is our third season of the Anchored Voice, helping men to anchor life. So we are starting up. Now, most of you, even after you view it here, you can also listen to it on your Apple Podcasts, Google Podcasts, Stitcher, Spotify, the works. You can go there and listen to it. So, but today, we are talking about investing, like the 101 of investing. Like, I'll be honest, man. I knew nothing about investing before I started. Okay. I watched a couple of YouTube. I joined a Facebook group, but I really knew nothing about investing. I had, invested in some life insurance. I had done some IRA Roth, but still didn't understand the nuances of investing in stocks. I kept hearing about Bitcoin. We hear about, mutual stocks, mutual funds. Right. What is should you be aggressive? Should you not? So listen, we want to help people right now. We want to help people anchor their life and finances. Okay. Now, there are some people who have made a living out of investing. Okay. Some people don't even go to work. Their work is in front of the computer, buying stocks, selling stocks, and it is crazy. So give us the basics. Give us the basics of investing.
Sure. So let me just give you some background on me.
Yes.
I've been in the industry, financial services industry, for about 18 years now. Went to Morgan State University, class of 2002, majored in international finance. When I completed my education, I went back to New York, where I'm from originally, and I worked on Wall Street a little bit. Didn't really like that. It was too much of the hustle of outside forces. I don't know if you ever seen movies like Wall Street and Wolf of Wall Street.
Yeah, absolutely.
Work
Absolutely.
working on Wall Street, that's exactly how it is. That's exactly how it is.
Wow.
Especially back in 2001, 2002. I was a runner on the exchange. So I don't know if you ever seen the movie Trading Places with Eddie
Yes.
Murphy, where you have
Yes.
the trading pit. I was in the
Yes.
trading pit. So I would
Wow.
run the orders back and forth. And that's how I got into the trading program with a company called Spear League and Kellogg, which was a investing arm of Goldman Sachs. And everyone has pretty much heard of Goldman. They're like the Golden State Warriors of investment
That's right.
companies.
That's I'm gonna be mad
So
that you didn't say the Lakers.
yeah,
Right?
yeah, the Lakers. No, but so I did that for about a year, 2 years, and then I went back to Maryland and I worked for T. Rowe Price. Became a licensed broker with them. And then I switched careers to focus on what they called structured finance. Structured finance is what you consider mortgage-backed securities. So CMBS, MBS, ABS, which is asset-backed securities. Now, this is primarily what brought the economy down back in the credit crisis. You know, the whole real estate debacle back in 2008 to around 2011, 2012. I was actually the one selling those particular investments, particular derivatives, and all that to the street. So
Yeah.
anytime you have your mortgage will be sold. So there are people making money off of you making your mortgage payments, and that's what I did. They called mortgage-backed securities. So I did that for about 10 years. And then I switched and went into project management, still on the financial services side, but I wanted to be a problem solver instead of causing problems, so to
Wow.
speak. Um, and I do that till this day. I work for an investment firm, Morgan Stanley. So I've been there for about 5 years now, all in the fixed income space. So I pretty much work with the traders, work with the controllers to enhance their trading platforms and how they do business. So I do that now. Um, so yeah, so that's just some background information on me, and hopefully I can provide some good insight into investing 101.
Now,
Um,
explain to me the whole Wall
mhm,
Street thing. You say you were the runner.
yeah.
All right. So I always have been confused in in the whole movie part. They're shouting out, sell, buy,
Hmm.
and
Correct.
somebody's taking in. They're actually understanding everybody.
Correct.
Like, how are they
Mhm.
understanding everybody? How are you understanding what to do?
Well, when I did it, everything now is computerized. So they don't
Yeah.
have those type of runners in the pits. Everything is on a handheld device. So
Right.
all your trades, all the tickets, your buy orders, your sell orders are all on an electronic device.
Wow.
Um, those that's what we consider high frequency
Right.
traders and high frequency computers. So back in 2000 to 2002, we were literally the ones running those orders that you would see, the slips, running it into the pits to where you would have the market makers. The market makers are the ones basically setting the business up, saying, hey, we're going to buy 500 of XYZ at this price. And then you see the tickers and you see everything going buying and selling constant. And
Right.
there's different roles. So you have your commodities traders, you have your option traders, you have your equity traders. The equity traders are the ones that are doing the stocks.
Yeah.
And then you have your option trading, which is based out of Chicago. You have the New York Stock Exchange, which obviously is in New York. You have the American Stock Exchange as well. You have your NASDAQ, which is about 30 stocks traded on the NASDAQ. And then, obviously your New York Stock Exchange, where you see all the running and the hustle and the bustle when you watch CNN Money or, listening to those type of podcasts and everything like that. So it's literally what you see in the movies. I
Wow.
don't know if you ever seen the movie like Too Big to Fail or Big Short. Obviously Wall Street Part Two. Um, that was very particular to me because that dealt with what I do on a day to day basis. They were doing the whole thing called credit default swaps, where you're making money off of people getting into debt. So you're
Right.
investing in toxic debt. Um, and that's what kind of brought the economy down as well, because when you get called on that, and when I mean by call, you have to pay your creditors, but it's all at once. So everything can fall into place all at once. And that's what happened. So when the housing prices fell, it's a trickle down because everything is invested in that particular vehicle. And then as you can see, you see what happens. That's why a lot of people, um, were getting into houses that they really couldn't afford because the loan officers didn't care. All they cared about was the spread and their return. So they were
Wow.
putting people in houses that they couldn't afford.
Right.
And then you have people making money off of that. So those are considered residential mortgage-backed securities. And then you have your commercial, which is commercial property. So the
Right.
same thing happened on the commercial space. And then you also have your asset-backed securities. Asset-backed is any type of asset class, car loans, student loans. You have traders and investors making money off of that. So you're making your student loan payments, there's people making money off of that. Making your
Hmm.
car loans, there's people making money off of that.
Right. And even when you
So
have money in the bank in your savings, there are people making money off of you just
correct,
having money in the bank.
correct. Yeah, the main, I mean, banks make money off of their fees. So it's not just of them holding your money; they're making money off of the fees and other, products and services that they offer.
Right.
Um, so yeah, and then that's why a lot of bank stocks are still stagnant to this day in terms of their volatility because it's based on what they can do from next year to the 5 year to the 10 year.
Wow.
So yeah, but yeah, back to investing 101. It all depends on what your style is. So if someone that's brand new doesn't know anything about investing,
Yes.
just trying to learn the basics, the best thing to do is to start investing in what we call mutual funds.
Mm.
Mutual fund is basically you have, let's say you own a house, right? That's the mutual fund. What's in the house is your underlying securities.
Okay.
So, like, let's say your, furniture, TV, all that. That's your underlying securities within your house. So your house is the mutual fund. You have your underlying securities within that place, within that particular security. So when we look at mutual funds that are offered by like T. Rowe Price or by Fidelity, you're investing in that mutual fund, but then you're also investing in the underlying securities within that mutual fund. So
Okay.
you're looking at a growth mutual fund. So a growth mutual fund, you have growth stocks within that particular mutual fund. So
Hmm.
growth stocks are like, like Microsoft, things that name brand,
Right.
Netflix,
Right.
all that are considered growth stocks because they've been around, they have good financial performance, their returns are good. So those are all in one mutual fund. You just have to decide which one you want to get into because
Mm.
they're not, uh, mutual funds are not as volatile as a stock would be. So, you
Okay.
see the stock price change every second. It's volatile, it's liquid, it's always constantly moving. A mutual
Right.
fund is what we call the net asset value, your share price. So it's
Okay.
always as of the prior day. So
Wow.
ABC Mutual Fund is $30 as of yesterday. So it doesn't move every single second of the day
Hmm.
because it's
Hmm.
based on the underlying securities underneath that particular
So
mutual fund.
that's kind of a low risk investment.
That's correct. Correct. Now there are some risky mutual funds. I mean, you have your mutual funds that invest in foreign stocks or invest in oil. Oil is very volatile, very liquid, as you can see with the gas prices and everything like that. So, it all depends on what your threshold is and what
Hmm.
you're willing to give up per se. So if you have an extra, that's why actually let me piggyback that. So that's why within your 401ks, it's always mutual funds. So you have like your retirement dated funds. So
Right.
those are the funds that have retirement 2035, 2045. That's based on the year that you're going to retire. So it changes, the volatility changes by the time you get to when you retire. So right now, if you're in one of those retirement dated funds, it's more riskier because you have time to make up that money if there's any type of loss. So it's always good to diversify by having one of those retirement funds and then having some, riskier funds because the returns are greater.
Right.
Mutual funds are based on return, so 15%, 16%, 18%, depending on the mutual fund. Um, and then, obviously you have your CDs, which is pretty much what you put in is what you get back out. Yeah, a lot
Wow.
of older people invest in CDs, which are certificate of deposits. It's similar to a savings account because it's based on the yield. Savings accounts have 1-2% yields, so you're not really getting anything once you cash in that CD. Um,
Mm, okay.
so yeah, so you buy
Yeah,
a
that's critical
CD
to
for
know.
yeah,
That's
so you
critical
buy
to
a
know.
yeah, you buy a $2,000 CD, a 5-year CD. That's what you're going to get back. You're going to get back in principal and maybe make a small return off of it because it's based on the yield. Um, but that's something that's very, very low risk. But you're not really investing anything, which is why I say get into mutual funds to start out with. Which is why a lot of 401ks, IRAs are based on mutual funds. And then you
Okay.
have your actual investing into securities, so individual stocks. Um, that's a very loaded question on where to start and where to begin because it's
Well,
based on
well, guess what, everybody? As we are live, you can feel free to turn in your questions. If you have any
yes,
questions, put it in
please,
the chat room. We'll answer it. But we're giving the basics of financial planning, the basics of
correct,
investments.
correct, correct. So with individual stocks, you can open up a retirement account. So you can even have a IRA, which IRA is an individual retirement account. You can
Right.
have a brokerage IRA. So you can trade stocks within your retirement account. So
Wow.
whatever company that you deal with. So if you have TD Ameritrade, where you have your IRAs, or Fidelity, T. Rowe Price, Morgan Stanley, you can trade individual stocks within that particular IRA, which is a retirement account.
What?
Yeah, so it's called a brokerage IRA.
Yeah.
And then you can, buy, now with stocks, remember the basic principle that you start out with is buy low, sell high. You buy a stock at $5, you want to sell it above $5.
Right.
So if a stock you buy a stock for $5 and it goes to $10. For example, you buy 100 shares of ABC stock at $5, right?
Hmm.
And then you see that it's now trading at $8, and you bought it at $100. That's $500. You sell it at $800. You just made a $300 profit.
Okay. Now I get that.
Hmm.
Now, here's the thing. You buy a great stock, right? Some
Hmm.
stocks are like they rise, but some kinds stay steady. They don't rise
Okay.
too much above.
Hmm.
But when do you sell high? All right, you sell high. Do you
Hmm.
ever look back and buy that same stock again? Do you kind of wait till it goes back down again? Are there stocks where you should just like maintain it?
Yeah.
Or
So there
what's
are
the
stocks
difference
that
there?
you can maintain. Yeah. So you can maintain that. It all depends on what you're trying to do. So you can take that profit and you can either buy more stock. But remember, if you're taking that profit and you're buying the same stock, you're buying it at that price. So you're not gaining anything. It's a wash. So you want to take that and possibly buy another security at a low price and then build your portfolio there. So you're taking your gains and you're buying another security at a lower price, and
Yeah.
hopefully the price will rise. And then, but you always keep in let's say you're keeping your principal in that particular stock, unless it's tanking, unless it's just dropping.
Yeah. And
Um,
and I tell you,
and
I've
then,
had some failures with this. So this is great information. Now, what happens? You buy a
mhm,
stock that you think is low. Like, you get information from friends, from sites,
mhm,
hey, buy this, and you buy this stock and it never
Hmm.
rises. As a matter of fact, it drops below,
Hmm.
and it never rises above what you bought it for. When do you sell that stock and just call it a wash?
Um, you can do that if you have that gut feeling in you, like, okay, I've held this stock for 3 months now, 6 months now, and I'm not making any money off of it, then common sense is telling you to get out of that stock.
Mhm.
It's not making you any money. You can be in something else. Now, the upside of having a stock and it's not going anywhere or you're losing money is that you're taking a loss, but then taxes, when it comes to tax season, you can write off some of those losses.
All right, did
That's
y'all
the
hear that?
upside.
Did you hear that? You can write off some of those losses, okay? So when you take a loss, it's still not a loss.
Correct. Correct. Now, the upside, the upside is that if your stock is making money and you're making a killing off of that,
Yeah,
that's called your capital gains tax. So you have to pay taxes on the gains that you're making.
right.
So, and that's based on your marginal tax rate. So, whatever your tax rate is, you're paying taxes on that, which is why you see in the news a lot of high net worth investors, they always complain about the capital gains tax. They always, there's everything happening with capital gains. I don't want to pay capital gains tax. So what they do is they try to minimize or hedge their taxes by getting to what we call AMT, which is some funds are subject to AMT, which is called the alternative minimum
We got a
tax.
question here.
Okay, so Elon, he sold, yeah. So what he did is he owed money. He owed the IRS billions of dollars. So what he did instead of using his own money that's in his account is he sold options within within Tesla. So he had stock options. So he sold 6 billion worth of stock options. So technically he's still making out, but that's what he did in order to pay, his back taxes. Um, Normally with us, we wouldn't be we wouldn't be caught in that type of situation because there's no way we would, say, hey, we're going to pay our taxes. Within anything else that's going on, we're going to pay our taxes. We don't want
Right.
to get hit a year, 2 years from now. We're going to pay our taxes.
That's right.
So that's what happened with Elon.
Wow.
Good,
Wow.
good question. Good question.
Yeah, 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 absolutely. Now, I'm gonna share a shameful confession here. I had GameStop for a while, and it was failing. I mean, I was like,
Yeah,
"Where's
it's
this
tough.
thing going?" Like,
Yeah.
and I bought it early, in the pandemic.
Hmm.
$5. Like, hey, after
Hmm.
a while, I was like, this thing is just hanging on by a thread. Sold it, and
Yeah.
within like a month or so, bing.
Yeah. See, and that can get very challenging because it's not based on your knowledge or you doing your research. That right there is pure market speculation. What happened to GameStop, what happened to AMC and all that
Yes.
is everyone has heard of Redfin and all the different social platforms that
Yes.
were, yeah. So during the pandemic, there were a lot of people on those, or Reddit, they were on those type of web
Yes.
social platforms, and they were
Mhm.
tired
And there were
of,
others.
yes, and they were tired of what they call the short sellers making money off of a stock price dropping. So what they did is they pulled their money together and started buying random stocks. They literally just chose which stocks to do.
Right.
AMC and GameStop. And you see how the prices went up because they were beating the short sellers. They were
Yes.
beating the firms, the hedge funds and all that because they were shorting that particular stock. And what I mean
Yeah.
by shorting is that they wanted the stock price to fall so they can buy it cheap. Because you can make money shorting stock. So let's
Wow.
say you have a stock that's $15, you want to short
Yeah.
that stock, you want that stock to fall
Right.
because you're making money based on how it's falling. The downside is that there's unlimited risk. So if it moves against you, so you're
Yeah.
shorting a stock that's $15, it's going to $20, it's going to $25, you owe that particular, you owe the difference. So you owe that money. That's
Mm,
called short selling and doing it on margin. So I don't
mm,
like, so
mhm.
when you hear those terms like margin call from trading places
Yes.
where the brothers owed $375 million at the end of the trading, they were shorting the stock. They wanted it to fall
Wow.
because they had inside information. They were trying to corner the market,
Wow.
but it moved against them. So they owe that money.
Right.
So
Right.
when you're, so that's why when, if you decide to get into that type of investing, you have to know what you're doing because it can be dangerous. You can lose everything because you're borrowing shares as well from what they call a clearinghouse. So you open up account at Webull, Robinhood, TD Ameritrade, these all these other investment platforms. Each one has what they call a clearing firm, to where they can essentially borrow shares from that clearing firm. That's what you're doing because you're buying in bulk. You're not just buying 100 shares. You're buying 1,500. You're buying 2,000 shares, but you don't have the money right now, so you're borrowing against that.
Mm.
And you
Now,
have to have
I'm
what they call a maintenance requirement, which is 33 and a
yes.
third percent.
Yes, I found out hard about that
Me?
maintenance requirement, okay?
Oh yeah. Oh yeah. Oh yeah. It'll hit you. It'll hit
I
you.
found out hard.
Yeah.
Wow. So, let me shift you a little bit.
Sure.
When we're talking about, what should we invest in? I've been reading some, like Warren Buffett type of books.
Hmm.
And one of the things the author was saying is that Warren Buffett does a lot of research into the company before he
Correct.
invests,
Correct.
right? And so, what is
Hmm.
the strategy of doing research into a
Hmm.
company before you invest?
Oh, you should do that regardless because you want to look at you want to look at the net gain of a particular company. And this is all public information.
Yes.
So if you're using TD Ameritrade, Robinhood, whatever platform, all this information is public information. You just have to know where to look within that particular silo.
Yes.
So there's a few things that you want to look at. You want to look at the net income. You want to look at the stability. How long has the company been there? What are they, what's any type of new products that are coming out or anything that they're thinking about? That's all in the news of that particular security. You want to
Right.
read that. Um, you want to look at the price to earnings ratio. So, stocks earn. So you want to look at what the price was versus what the earnings is. And then you can divide that to see if it's at a decent percentage. And this is all public information. Um, you want to look at management. How long has management been there? CEO, the CFO, how long have they been
Mm,
there? Um, you also want to look at if it pays a dividend. That's important. Dividends is, that's like uh what do we pay? Allowance. So that's, when we give our kids allowances, the dividend is an allowance based on the performance of the stock. So you have, your cash dividend, or you can reinvest it to buy existing shares. These are type of things that you want to look at before, buying a particular stock. And then also, a lot of people get into stocks that they know about, that they're comfortable with, um, that you like. So if you, I'm just throwing, like, if you like Louis Vuitton, if you like that type of, you want to buy what you like, so you can
yeah.
own it. You become an owner of that. You
Yes.
you can decide
Yes.
on what's,
Come on, say that
the
again.
yeah, you're an owner. You buy stock,
Yeah,
you are a owner of that particular company,
that's
regardless
right.
of
And
how
so
many
you get to
shares
vote.
you get to vote. Exactly. You'll get the proxies in the mail. You vote on what you want. Yeah, so there's different avenues with looking at different companies and what you want to invest in.
Okay. And so doing that research, you'll know how to necessarily, buy low or buy at its lowest at this point. I
Correct.
mean, these things
And there's a
jump.
timing aspect. Yeah.
Right.
So typically you want to buy a stock between when the market opens to around 11, 11:30. That's typically
Mm,
when you want to buy because that's when it's most liquid. That's when it's moving. Um, you want to avoid 12 we call it intraday. So 12 because it's lunchtime, 12 to 1:30, because that's when you have, I mentioned, the high frequency. So the high frequency traders typically do their trading around that particular time. So
mhm.
you don't want to buy then. Um, and then obviously near the end of the day, if you see the price going up, okay, I'm gonna hold on to this. This is all right.
Yeah.
Now there's trading called day trading to where you buy and sell within the same day. Those are pattern day traders. You have to be approved for that. You have to know what you're doing because you can
Mm,
lose everything with that as well.
wow.
And that's where people that do this full time, that's what they do. They're day traders. They buy and sell on margin all day,
Wait a minute, let's
all
get back
day.
to the you have to be approved for this. So you can't just get on TD
Oh no!
Ameritrade and
Oh no! 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 No!
just
No!
start
You got to be
trading and
approved.
buying.
Nope. Nope.
How do
Nope.
they know? I mean, is it
Oh,
like
it's
you have a
based
limit?
on, yeah. So you have to answer a few questions. It's based on your income.
Okay.
It's based on your how long you've been investing. Now, these numbers it's based on what you put in the system. So let's say you're brand new, but you want to be a day trader. You would basically put in information that you think that they can approve you on. Oh, I'm 15 years experience. I have, you know, 300,000, in the bank that I can trade with and all that. But that's not true. But you're putting that in there, but they're doing that in the event that if you lose everything, you can't sue them. You told us that you're a good investor. You told us
Wow.
that you had X amount in capital. Now, with margin accounts, you have to prove, you have to show that you have X amount in your account, in your actual, brokerage account
Right.
in order to get margin. But yeah, your day traders, yeah, you can just basically you put whatever information you put into the system, they can approve you for, if you want to get in options, option level one, option level two. But we'll talk about options at a later date. This is all investing 101.
101. That's right.
Yeah, options it's a different animal. That's where you make real money is in
Wow.
options. All the people that did the AMC
Yeah.
and the GameStop, they were buying options. They were buying calls, covered calls. But we'll get into that at a later
Okay,
date.
absolutely,
Yeah.
absolutely. Yeah, we're not gonna be too long. We just wanna
Yes.
give people the basics of what to start with, how
Yep.
to research, what
Hmm.
should you look into. So, give us a little bit more about the research process. I mean,
Hmm.
we hear of different companies, how long they've been.
Hmm.
Do you ever randomly just, like, see something in the store and be like, "Huh, I wonder what that stock is like?" How does that inspiration come about?
Yeah. So you see something. Let's say you see, I don't know. I'm just using that as an example. You see Coca-Cola or Google or a product, a Coca-Cola product. Like, I
Yeah,
can own that particular. I can be a shareholder of this company. So let me do my due diligence. Let me go on where I have my accounts
yeah.
and read the commentary. Look at what the recommendations are. So there in the research, you have analyst recommendations. So
Mm.
it's based off of all types of information that's within your confine, and they can say strong buy, they can say strong sell. So you want to look at that information as well to make a educated, you know, um,
Okay.
guess on
No,
that.
that's
But
powerful. That's
this,
powerful
yeah,
right there.
yeah, you'll see it. You'll see strong buy. You'll see strong sell. You'll see, um, hold this particular stock.
Wow.
Now you don't
Okay.
have to go with the advice. You can
Sure.
go against the grain. It all depends on what you want to do.
But it's great to
Um,
know that there is public knowledge
oh
of,
yeah, oh yeah,
a recommendation or not.
correct. Yep, and it's all public knowledge. It's on every single platform that you get into. You'll see it when you click on info of that particular security. And you'll read the commentary. You'll see historically how the actual stock is doing, like
Wow.
how much volume is being moved. You want to look at the volume. You want to look
Yeah.
at the market capitalization. You want to look at all that information to make the best answer possible for you and for your family and everything like that. Um, that's what I do. I unfortunately can't give advice, based on what I do for a living, because there's a conflict of interest. But you know, yeah, there's so many tools out there that people can
Yeah, yeah,
use.
no,
I mean,
we
there's so many
and
tools.
and let me tell you, we don't even need any inside. We just need to know
Yes.
what we're looking at because, when you're starting out and you're starting investing, little by little,
Hmm.
you want to hear that information, what time to start trading, what time to look at,
Yes.
how to
Hmm.
research, how do they do it,
Hmm.
and a lot of people don't know the
Yeah.
basics. So for a
Yeah.
lot of people, this is great information. So,
Hmm.
this is where we'll, hold it here. But
Okay.
um, is there a way if people had questions, can you
Oh
be a
yeah.
coach to somebody or not necessarily telling them what to do, but how to do it?
Absolutely.
All right.
Absolutely. Yeah, I
How
can.
can people
Yeah,
get in touch with you?
you can
What's your
give me.
email or
Yeah, my email is Patton, Patton 8961 at gmail.com.
all right. All right, here we go. Is this it?
Yes, it is.
Okay. All right.
Yeah.
Yes. So
Yeah.
everybody, if you're listening, and if you are listening through our iTunes, Apple Podcasts, Google Podcasts, Stitcher, Anchor, Podbean, anywhere you're listening, we'll make sure that this email is in the description. So you can check the description, and this email will be here. One, thank everybody for tuning in to the Anchored
Hmm.
Voice podcast, helping men to anchor life. We'll definitely have you back, bro, because we
Of
need
course.
more of this knowledge. We need more of this
Yeah, we'll get into
information.
cryptos and the next one.
Yes. Well, yeah,
Cryptocurrency.
listen. Well, before you go,
Hmm.
is Bitcoin a good thing to look into?
It is a good thing to look into. The downside of any type of cryptocurrency is that it's not regulated.
Mhm.
So you can lose everything with crypto. I mean, everything because it's not regulated. It's based on digital currency, but you can use, to buy online and all that stuff, but it's digital currency. There's nothing backing it.
Wow.
Um,
Okay.
Now you can buy portions because the Bitcoin right now is at what 65,000 a coin. Bitcoin was founded what back in 2010.
Yeah.
So let's say you got it and you invested early in Bitcoin, you'll be a millionaire right now.
Yeah, and I'm mad at
And you
myself
can buy
because
portions. You
I
can buy
was
portions of
told
Bitcoin.
I
Hmm.
was told in like at least 2013,
Hmm.
invest in Bitcoin. But
Yeah.
when you don't know
When
something,
you don't
that's
know.
why we're trying to educate
Hmm.
people. So we'll get more
Exactly.
into, the cryptocurrency. We'll get back to that another time.
Yep.
Thank you, my brother. Thank you so
No,
much,
thank
man.
you. Thank you. Salute.
And
Yeah, appreciate it.
absolutely, absolutely. Everybody is the anchored voice, helping men to anchor life. We'd love for you to smash subscribe on the button there. We'd love for you to subscribe to our channel. We'd love for you to follow us. On Instagram. We are McGuire ENTV. McGuire ENTV. Please subscribe to our channel. Share this video with anybody you feel will benefit. We want to make impact in the lives. This is the Anchored Voice, helping men to podcast, a podcast helping men to anchor life. Thank you, my brother Danny Patton. What's up? What's
Of
up?
course.
All
All
right.
right.
Have a great
All
night,
right.
everybody. Thank you so much for tuning in. Look forward to seeing you on the next episode. Thank you for listening to The Anchored Voice. For the video edition of this, subscribe to our YouTube channel, McGuire ENTV. For audio, listen on Podbean, Spotify, Apple Podcasts, Google Play, or Stitcher. Until next time, stay anchored.